Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So it is Tuesday. We entered today's session not really knowing what to expect. I know this morning I came in with 6, 7 longs, maybe even 8 if I recall. Looked at my little phone or my handheld at around, I think, 5 o'clock, and I saw the Shanghai down 6.2%. Red hours across the board in Asia. Europe flattish, and I was like, oh my goodness, what's the futures going to be down today? We got another trap, and they're only down 4 or 5 handles. So then, what you have to do is you have to come in and figure out how to navigate around it. Can you make additional cash flow buying the right stocks that are red to go green, and can they stay green and continue? Do you have to potentially buy a little bit in the first 15 to 30 minutes, and if they don't rally and they break those lows, get out of the way because you know what? Maybe you have to salvage the trade and revisit. Or do you just get a way out? You get rid of the position and say, I'll also revisit and figure out what's next when the time is right. So with all that said, I think the theme of today is it could have been worse. Is it a trap because giving bulls a false sense of security and tomorrow we get, bamboozled? I don't know. But all I know is, if you came in today with the right plan, there are definitely ways to make some cash flow, make some money, get a little bit more comfortable, get a little flexible. As there is some concern that what happens tonight with the Shanghai, another 5% move lower, it's going to be hard to ignore. You'll see a new low, in the FXI. You take a quick look at the FXI, and this thing created a lot of volatility once it initially broke, this upper support, which was right there. That was around 49. Broke support, came back up. So if you missed your sell China here on that retest, you could have done it right there if you didn't do it when it broke the 8 and 21 day into that gap. But anyway, this is when every news media story outlet in the world talked about the sell-off in China, and then since then you had this bull flag type pattern develop. Right here is your pole, there is your working off a huge move, and now it does seem as if it could head lower. Okay, think about it. If this was a stock, all right, you would say, here's your 200-day, here's all your moving averages, it's well below it, and here is the prior low. So below this, a lower low, and that will be hard to ignore, and we won't probably be numb to it. And then if you think about where the next support in the FXI is, all the way down here, closer to 36. So there's definitely concern there. So concern number 1. Concern number 2, HEDJ, getting pretty comfortable now below the 200-day. You started off this trend here, very nice, right, to start 2015, broke trend right there, fell below the 8 and 21-day right there. Remember we talked about the head and shoulders top here, gave you the measured move from here to here, down to here, and then ever since then, it hasn't really led. It looked as if we were going to have it break this descending channel here and hold up, but now all of a sudden, it's below the 200-day, and I don't know, it's just, sorry, it's a little weird here, but gap down, unless this fills this fast, it's looking a little bit more weaker than stronger, so you have to be a little careful there. Okay, let's just get away from that. I drew so many lines. SPX, all right, came in today. I said I would love to see 292 hold. Okay, why did I say 2092 hold? Well, first of all, here's the low end of the range. Here's that red dog reversal from last Wednesday. Here's 2080. This is when we broke above this pivot yesterday, which was right around 2092. So I figured, maybe we could see some commitment to that. So if you look here, of what happened today, get this out of the way, all in all, in stride, right? Here is that pivot I just talked to you about. So yesterday you could have bought the dip, added here, sold some on the close to get a little flexible, but take some longs, and then buy a little back. And it did go green, at some point, and then guys on my BTF, I'm like, you know what? I wouldn't be buying strength here. Granted, things held in well considering Europe's a little wishy-washy. China could be lower, and no really reason to be off to the races when we have Fed minutes tomorrow, etc. So what do we have? An inside day. So we'll see what happens here tomorrow. This will be tomorrow's range. Okay, we'll see what happens again there. And then if I said that already, didn't I? If you take a step back then again and just look at the range, then you could draw this, and we'll see if we at all try and get back up there. But all in all, smack in the middle. Pretty constructive today, I would think, and then there's still a void right here back to there. And I think, the market really wants to hear liftoff is happening. I don't care what everyone says out there. All the institutional reports I read, and these guys are pretty much on the money, is that we want liftoff. We want lift off and then gradual, 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 and that'll help maybe the banks. It'll help people give some credibility to the Fed, et cetera, et cetera. But until that happens, we'll see. So I came in today with multiple longs, one of them being Amazon. Didn't do much today. Still, the chart looks great. Still looks hanging in there. It's hard to trade intraday. Still real close to that area. It was up $3 today from being down $2. You could have easily traded out of it or still be in it. Still looks good. I traded out of it up a few. Google, wishy-washy. These two stocks are very, very hard. Hard to day trade because they don't go higher and you can't sell them higher. If you bought into this gap here, where it held, you're doing just fine. Never pierce this. You have 650 was your stop. You were in for the Alphabet City news. But if you've been trying to day trade it on this gap up on that news, didn't close higher, and then basically it's been just grinding here. So I don't know if it's going to change, but I guess it's going to have to get now above 696 to 704 to perhaps take out the high. If you can handle the loose, wide swings, congratulations. Me, I can't buy enough and feel comfortable enough and be in enough control to really safely trade this thing. If you can, congratulations. We haven't had a real quick move like that, in a while, and obviously that happened before earnings, which made it also difficult. So I would say Google and Amazon are still leaders, but they're just hard to day trade. You have to give them a bi-weekly approach with big room, and if you've done that, you've been just fine. What I do like to trade is I like to trade like a Facebook that you could grab a lot of. You can get in and out. There's more liquidity. Facebook was where I made most of my money today. Facebook didn't participate yesterday, so all I had is a feeler on. Figured that maybe it took a day after this Red Dog reversal, so I bought a little bit in that. And then once it traded through this spot, I added to it. It showed it relative strength and gave you a nice dollar. So this was where you could have made your day trading money. Okay, and I'm still in a sum considering it closed fine. The next level here is around 96 for it to really get going. At this point, nothing's really getting going here, so it's worth sticking with some. But really, it was just a good day trade so far, and it showed some continuation support from the Red Dog reversal here at 91.80. So this is still above all moving average, best in breed. Just market's a little wishy. I keep using the word wishy-washy, but it is wishy-washy. So having small overnight makes sense. I also overnight was in Apple. Apple at least gave you a way out. I talked about, I think, 115 something having to hold, or even 116, and it was in the first half hour it was weak, and then it went green, and then you could have pushed your way out of it. You could have bought that dip, traded around it, and as of now, doesn't look great. Obviously, it's still below the 200-day. It's below the moving averages, but still, it has some commitment to this Red Dog reversal. Held higher here, and then held higher here again, and you could have, been okay with it. And now, if it flags again and gets above this, maybe it continues. If it were to break this and close below it, it'll lose interest again. All in all, this pattern is not great. It's still below this channel here. They have their event September 9th. Sometimes it runs into it. I'm thinking that maybe, it could, but I'm not overly trading it. But it did give you a decent trade, after the first half an hour or so, where you could have traded your way out of it. And that's all you could ask for, really, is to trade your way out of it. So here is where it opened up lower, came in, went green, gave you, what was that? No, here, this. Came in here, okay, held prior day support, okay, 16, that's where it broke out from the prior day. And then slowly just gave you actually some signs. Here was your first move, couldn't break the lows, right? When it broke this spot around 1660, you had a 50-cent move to close the gap, and you could have bought more versus that low. Okay, so right around here, when you had your higher low around 1620, you could have said, okay, Red Dog's still in it on the VTF. Bought a little bit more versus that spot. Came up, you could have did a quick active trade to fill the gap and got back to what you had overnight and made your cash flow, and then it wound up going green all the way up here, and you could have actually made a little bit of money there. And then you could have drew your line, this little ascending channel, and said, when it breaks this, I'm trailing it, I'll get out of the way, and then it broke. So at least you had your way out of it for a few hours. So whatever. At this point, Apple is, a C play. Maybe it gets a little bit more. Then also, on my main screen was Netflix, because Netflix has been a leader. It's above the 8-day. It's been a lot stronger. So Netflix and Facebook was where I would go after the stock. I had both overnight. in my head, I'm like, okay, Netflix 125.76. If it breaks above there, maybe we get another nice trade back to highs if the market wants a leader. But that doesn't always happen. One of my rules is if you trade a stock for momentum, it's got to hold the momentum level for you to stay with it. If you're in a tier 1 and you want to go to a tier 2 on a breakout using a tier system, you only stay in tier 2 if it stays above that level that deserves it. So anyway, Netflix broke above that level. This doesn't look like much, but at least it gave you a way out of it if you were prepared and quick. And it could have, if you were flatted, you could have made some quick money. Okay, at this point, it's still above the 8-day. It still looks fine, but it broke above this area. If it were to do a move like this, which it did here, okay, this was the previous momentum level. This momentum level was 115. Okay, it broke above it and had an unbelievable day, and then gave you another day. So from 115 to 126, that's a great move. But it went above the momentum level and closed above it. This time, it nudged above the momentum level and just wasn't ready yet. Doesn't mean it's going to fail, I don't know, but it wasn't ready. You go to your 5-minute chart, you could see, actually it was so quick, you could almost not even use a 5-minute chart. Actually, here, go to, I guess, your 1-minute chart maybe. Okay, 1-minute chart's a little easier to see. Let's see. 1-minute chart. Yeah, so the 1-minute chart started off negative into support. Okay, I know I was buying it when it went green. This is where I added some. Then it stopped right here. I added some. Went quickly through. I always sell some when it goes through it. Get comfortable, and then I was like, okay, let's see if we could hold the 125.80. If it can't hold 125.80, I'm going to get, get a little bit, reduce it a little bit more, and then, once it broke, I went red. I'm like, you know what? I'm going to revisit it. So off the bat, I had it overnight. And then, you had to be quick. Everyone says, how do you make your money in the beginning of the, first hour of the day, hour and a half? You have to have your levels. And this was your first move. Then it hung around. Then the market tried to bounce. It gave you an additional move. So from 125 to almost 127, $2, not bad to sell some just in case. And then if this were going to be any good, okay, and flag, and continue, it probably shouldn't have, got back below this 125.80, which it did, and that was that. Facebook, you can look at it the same way. Okay, Facebook, let's go back to here. Facebook, a lot different, right? Here was your momentum level, okay, which we talked about, 94.70. Had a quick move off of 930, okay, went through. Then it consolidated. Did it break back below 94.60, 94.70, which was the area? No. Went sideways, showed relative strength, and you could have actually been a buyer again above 94.80 for a move to 95.70. So off the bat, I was long overnight. I started buying it a little even before the number, added here, trimmed a little. Still had more than I had overnight. Let it rebuild. We went after it again here, and then got back to a tier 1 and held a tier 1 pretty much the majority of the day. And then, when things started getting a little wishy-washy, I got a little bit lighter. But all in all, look at the difference between this move up, sideways action and continuation, versus the Netflix one. That's how you judge how do you stick with an idea when the market confirms it. The idea in Netflix didn't get confirmed. The idea in Facebook was a bit better, had a little bit more traction. So some guys are talking about the reversal in oil today. We've seen that happen, and is it a real reversal in oil? I don't know. We've seen this before. Every rally has been sold. At this point, I guess you have 1384. We'll see what happens there. You're seeing small, I guess what you could call commitment to the move off the lows. But we've seen this before. I like to show you this pattern because so many people thought the oil stocks could do no wrong, back here. But all of a sudden, when you see this head and shoulders pattern with the left shoulder, the head, the right shoulder, you better get ready to run for the hills or get short. And not only did you have the head and shoulders pattern there, you had the 200-day, which it broke below, never got above, and then pow. So down here, if you're trying to see if there's a trade, because that's all we're looking for right now, you had your small reversal in the XOP right there, never made a new low, came back up, and now it's building some kind of flag here. So we'll see if today was a small little micro low in oil, maybe this will continue to the upside, and then perhaps Same thing goes for the XLE, but every time this has happened, it's failed. So if you're in the XLE towards the end of the day, I nibbled a little bit, perhaps trade versus this spot. And if it happens to break above this flag, maybe, this is a small little inverse cup and handle or inverse head and shoulders pattern, which could give you a move back to perhaps here. And that would probably help the broader market. So we'll see what happens there. Some guys are thinking, GLD is hanging around for the first time in a while, and I guess you could say it is. There's probably some room to retest this broken support, which will now be resistance. You had your first move here in the GLD, and now it is holding a bit higher. If the market's going to sell off, maybe this can get another move higher to fill this gap and push a little bit higher. We'll see. Tesla was a decent, second-day trade for some guys. I didn't touch it. Still looks okay. Back into resistance. I probably wouldn't be chasing it there. Mobileye, after a big 2-day move from last Friday, had an inside day. I still think stock looks great. It's got a big future. Holding above here could create another flag for another move. It's got to let the 8 and 21-day catch up. 1 day, 2 days, so this isn't the biggest deal. And if you're in it from back down here, or you're in it from this small red dog reversal down there, congratulations. And if you have it in the drawer, if you're trading it, I think there's still a lot of trades out there to be had. It also gave you a nice trade. Remember this descending channel here? Descending channels is when a trend changes. Everybody who shorted versus descending channel, hopefully they changed their tune once it broke, and then started a new trend. Higher low, higher low, higher low, higher low, higher low on its way. And then it held this nice breakout above the prior highs here as most stocks sold off. So with all that said, it's Tuesday. Again, today could have been worse. I guess we'll see what happens tomorrow. If China is up 1% or 2% and not a headwind, and Europe is, green, perhaps, the futures will do what it wanted to do today, tomorrow. If China's down 4 or 5% again and makes a lower low, chances are, futures will be lower, and you got to make sure you have a plan to trade around your positions or salvage your trade if we happen to get a little bit weaker, or weakness sets in. So we'll discuss this tomorrow. Amelia will be here again. A lot of you guys like her, and she's been doing a great job. Happy to have her while Brittany's out waiting for her bundle of joy that's coming in September. If you have a Twitter address, say hello to her and say hope she feels well. I'm sure she's home and she'd appreciate that. And that's about it. It's a summer. Enjoy yourself. We have about a week and a half left. A lot of people on vacation, but thank goodness there's been movement and some decent action across the board in some of our key names. Hopefully that'll continue. Remember, tomorrow is the minutes, and that'll be important. Have a good night.